day 3 of the Fire Dev Days. Let me start off by finishing where we left off yesterday evening. Bottle Island, Fire Island. I personally had great fun. We have some pictures for you here on the background. We were with quite a number of people visiting the island. It was actually pretty funny. I especially like the fact that you could, creep up on people and then slowly you would hear what they were talking about. It's very, I loved it. We had sessions around the fireplace. I know there have been some people just standing on top of each other. Well, you see Watt here completely enjoying himself. And all in all, I really liked it. If you want to see what you missed yesterday, or you want to go back to your favorite place, the islands are still open until the end of this meeting, so you can still go there. You can even go mountain hiking. This was me, actually. I looked down on the whole island. They did it pretty well. You can walk around it, swim around it, get on top, and then you have a view all over. It was interesting. I was there all by myself, and then people would come up, and I could have nice one-on-one discussions. It was absolutely lovely. Good. That was yesterday. Now let's go to tonight's program, because of course we have something for you in place. Yay! Drum, 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 drum. Well, can I jump? Whoa, let's see. Yes, I can. Hello. One more time. I make a total fool of myself. Oh, close the jacket. So tonight we have a bingo, and it's a kind of a virtual bingo, of course. Looks a little bit like a scavenger hunt. I will not say too much about it, but please join us at 6 o'clock tonight. For those who missed out yesterday evening, this takes I think this takes about 10 or 15 minutes. Just join us for the bingo tonight, and we'll have fun. It will be presented, by the way, by James Agnew, who I challenge here to wear something even more outrageous than I am doing now, and I'm sure he can. He's got a knack for it. So, bingo tonight. Good. That's it for now. Let's return back to normal. Undo the jackets. Oh, it's getting hot in here. Nice. All right, there we go. Back to business. We're at the opening session, and yes, let me go to the next slide. There we go. We got a question from the channels yesterday whether I could go into a count of the number of participants by country. Of course, we have no secrets for you, so here it is on the back. As you can see, there's a surprising number of people from the US, and then Germany, the Netherlands, UK, and so it goes down. Quite a number of people from India and Philippines also, I would say. But it's surprising the number of people from the US. They still have to go out of, rise pretty early, but obviously they think it's worth doing. I can't say this enough, so I'll just repeat this. The most frequently asked question is, can we still see the recordings? And yes, we can. Just like the days before, you can watch the recordings here. Oh, it's always nice in Mirror. Just go back to this yesterday's session and you can re-watch it. Very useful. I used it to show how much I was making a fool of myself yesterday for my girlfriend. So the slides are still available like before under documents. So as long as we have the slides, we've put them, I think, including everything from yesterday. We'll try to keep that updated. Also, the virtual lounge is still open. So if this is your first day, it is possible. Then and you're in some kind of trouble or you have questions, join us in the virtual lounge. Also, if you're just feeling lonely, we'll make sure there's always someone with a shoulder or a ear to listen to you. That's a virtual lounge. The Whova community board, Ask the Organizers Anything, is also used pretty well for questions. The Zulip stream, and if you want, you can email us. Then, what we still can't do is this. It's funny if I see these kind of pictures like you see now on the background. It's like watching a movie from the 70s where people are smoking inside. You're like, whoa, did we do it back then? And yes, we were this close to each other back then. This is just 2 years ago. Still, we want something like a fingerprint from every single DevDays. So we've been thinking about how to do it. Obviously, we can't make pictures like this, but it would be nice if you want to become part of the DevDays history, you could help us out by sending us a picture while you are watching DevDays. Maybe a thing like what right here, maybe with your cat, your pet, whatever you fancy. Just show us how you did it, and we'll make you a part of the collage of this November 2020 DevDays. Of course, like yesterday, I'd like to draw your attention to our gentle sponsors. Everyone's there. Yes. Those parties that have helped us time and time again to make this possible and affordable for you. So please visit them in the exhibit booth. Thanks again for helping us organizing this. And then over to the content. We have one keynote now, and that's a keynote by Stephanie Mcconnell. And what we'll be discussing is, well, at least here in Europe, we have new regulation called PDS2 that makes it possible that you have third-party apps using bank data from different banks. Much like we would like to have healthcare apps using data from multiple providers. We're slowly getting there, but we still think FinTech is a little bit ahead. So we as DevDays organizers, we're looking for someone in the FinTech community to speak to us about what has been learned by the FinTech business, and Stephanie is going to talk about that. So what can healthcare learn from the FinTech boom? Stephanie, up to you.
Hey DevDays, Stephanie Mcconnell here, zooming in from Boston, Massachusetts, but very sad we can't all be together in the Netherlands. It's day 3, that means you've probably all been in many sessions already, hearing a lot about FHIR and the healthcare industry. I've spent a good bit of my career in healthcare, working in technical implementations at Epic, consulting with a few hospital systems, and now working with a COVID task force called Project Beacon. During this session, I would like to take a break from healthcare briefly and talk about another industry near and dear to my heart, the financial technology industry. Some of you are probably familiar, but for those who aren't, we can keep it simple and refer to financial technology, or FinTech, as anything money touches. Having worked in both industries, it's always interesting to me how similar they are when you really look. They're both highly regulated, built on old legacy systems, but rapidly evolving, and very protective of data. I believe what you are doing in healthcare right now feels very similar to something that happened in FinTech. So today, I'm going to run through a brief background on the problems that faced the FinTech industry, what happened as a result, and how we might use the FinTech industry as inspiration for what might be ahead in healthcare, and why what you're doing is important to that future. So first, let me orient you to the financial industry before 2008. Some of you might have even been there. Most interaction a person had with their financial institution happened inside of a bank branch, sitting at a desk in front of another human. Crazy, I know. But a bank was your financial home. Everything you needed done, your checking account, savings account, often wealth management, the loan for your car, the mortgage for your home, all in that one building. And then the financial crisis happened. Lehman Brothers collapsed on September 15th, 2008. This wasn't one of those things that only Wall Street felt. Average Americans across the country and people across the world lost the savings they had invested. They lost their jobs at a time no one was hiring, and some have had to work years and years after they planned to retire because their 401ks or their retirement investment accounts dried up. Now, the average American probably still couldn't even tell you exactly why that all happened. They don't understand the massive house of cards that the stock market is built on, or what derivatives are, but they know that they had money sitting in a financial institution before, and now they didn't. Their distrust and resentment of their banks grew. Now, this happened to be right around the time of an evolutionary technological moment. The first iPhone had recently been announced, and the App Store had recently launched. So, doing things online and on your mobile device was becoming more common, and younger companies were starting to really care about things like user experience and user interface design. So, startups began to provide attractive, user friendly services that used to only be provided by financial institutions. For instance, wealth management could now be done via apps like Betterment and Wealthfront. Now, Robinhood is a really common one. Sending money could be done using Venmo or TransferWise. Cash App is now a really big one. So, thus, the unbundling of banks began. In the early days, no bank wanted to share their data. They would say consumer privacy or it's proprietary or secret sauce, and startups had to get really creative. FinTech giants like Betterment, Indiegogo, NerdWallet, Venmo, TransferWise, SoFi, Stripe were all founded during these first few years after the crisis. And back then, to connect your bank account to a new service, you would have to verify your account, which involved entering your bank account's routing and transit number, and then waiting days for them to place two small deposits into your account. And then you would report back what those two deposits were to prove that it's really you. The next iteration of data access involved companies asking you to log into your bank account and then just simply scraping anything that they could. Some companies still do this. Until 2013, a couple friends were unhappy with the lack of transparency in bills they were paying, so they decided to put their coding skills to use and build a financial planning app for themselves. And they found it so difficult to get access to the necessary data in their bank accounts that they ended up scrapping the financial planning project entirely and just focusing on the problem of accessing data in the bank account. The guys were Zach Parrott and William Hockey, and they ended up figuring it out and founded a company called Plaid. Plaid links your bank account to other apps via API, quietly powering everything from Venmo to Robinhood to Coinbase to Betterment and Acorns, all these fintech apps you might have heard of. Plaid integrates with more than 10,000 banks now and connects to roughly 20 million consumer accounts. If you've ever had a screen pop up asking you to log into your bank account, you've likely used either Plaid or their main competitor Quovo, who they acquired in 2019. By adding tools and analysis on top of the banking data, startups have been able to create so many different kinds of apps and tools like budgeting apps, expense management tools, authentication for direct deposits, e-bill pay. It can verify someone's balance in real time and can understand income and employment. So the possibilities are vast for what you can do with that data. So for us, why is it important to know about Plaid and what they did for the fintech industry? Their technology helped the entire fintech industry grow by making it cheaper and easier for developers. Startups that don't have the funding to be able to hire a whole engineering team to sync with banks couldn't have been created without Plaid's API. It enabled entire classes of companies to exist, fueling the creation of new products and continuing that great unbundling of the banks. Users who already held distrust and resentment toward their financial institutions flocked to these new, cool, user friendly companies. And now the number of people who choose to go to a bank branch and sit at their wealth manager's mahogany desk is minuscule. Now you can hold your wealth manager in your hand. With all of these new apps popping up, Plaid helped to tie this fragmented ecosystem together. And what Plaid did that made them so successful and the winner in the space was sit down with fintech startups in their earliest days to figure out what they were trying to do. And they made their system work for the use case. By doing this, they helped literally bring to life thousands of fintech products, leading to one of the biggest and fastest industry booms we've ever seen. Following the financial crisis, global investment in fintech companies increased more than 5,000% from $1.2 billion in 2008 to more than $69 billion in 2019. Innovation came to the fintech industry because of a crisis. External factors helped lead to the fintech boom, but having access to an API from a company with founders who were obsessed with building for new creative ideas was what helped fuel that boom. Now that you're all well versed on the background of the fintech industry, let's go back to healthcare. I believe that the COVID crisis is to healthcare what the 2008 financial crisis was to fintech. This is a jettison moment where willingness to adopt technology has skyrocketed both within the medical industry and with patients. The head of telehealth at the VA told me that she believes in the first 3 months of COVID, the VA advanced tech initiatives she had assumed would have taken 5 years otherwise. People who never would have considered telehealth are embracing it and getting used to the idea of medical stuff happening outside of a medical facility. People will continue to feel more comfortable engaging with companies outside of their clinic or hospital for their medical care well into the future after this. So the title of my talk is something like How Data Can Unlock the Future, but it's not just data. Data has always been there, but it's been sitting behind big fat walls of banks, of hospitals, of medical record companies and payers. And if the healthcare industry follows the fintech industry, there's about to be a grand unbundling, meaning people will find best in class products for specific reasons outside of their existing medical home. And we're already seeing it with specialty and population specific products gaining popularity. Livongo and Virta Health for diabetes, Cricket Health for kidney disease. There are a ton of examples. Specialty apps are already here, but they're not plugging into your medical record and they're not talking to each other. Health data used to only live in medical records and insurance records, and now it's originating outside of the medical system. It's originating on your phone with your sleep apps and health trackers. These apps and websites are providing a better user experience and providing personalized value and making you want to engage and give your data. The chief medical officer at Dell gave a quote years ago that it's not a data problem, it's a filter problem. Physicians want data, but they want it presented in a way that is useful and actionable for them. He said, I think integrating that information into the existing workflow is really the goal and where we will start to see real value. If we can ever hope to have a holistic health account where medical professionals can use all the data people are putting into these apps, we need better pipes to move that data around. Like Plaid did for FinTech, FHIR could be the missing link in healthcare. So backing up, what made banks open their data walls in the first place? Two reasons. The first, of course, is regulation. PSD2 in the UK said that banks have to make data available in a secure and standardized format using open APIs to be shared more seamlessly between organizations digitally. This regulation was paired with one called GDPR to protect that data, which is important that we consider privacy and security as we make this kind of sensitive data more available. In the US, Section 1033 of the Dodd-Frank Act, which was passed at the height of the financial crisis, guaranteed the rights of individuals to access their own financial information from their financial institutions. But in the US, there's no legal requirement to make a customer's financial data available to a third party, even if the customer provides consent. In fintech, the second big factor was competition. With all of these new popular services coming around, no bank wanted to disappoint customers who wanted to connect their account to a third-party app by not providing an integration. However, with so many new apps coming around, it would be challenging to integrate with every single app that one of their customers may want to use, which is why banks are willing to work with Plaid and build just one integration that will work with apps across the industry. And healthcare is already ahead here. They have to share your records if you request them. And CMS is calling for the use of APIs in stage 3 meaningful use, and is even making payers provide data to their members through FHIR APIs. The ONC's final interoperability rule requires federal plans to support a FHIR-friendly API. All of this means that this unbundling is even more likely to happen in a big way in healthcare. For years, people said interoperability in healthcare just isn't a possibility, saying no one will open their doors, no one will share data without regulation telling them to. Well, the future is here. You're all here as it's happening. The CIO of Allscripts said, the future of the EHR is going to look a lot like your phone. Eventually, we're going to stop building the Swiss Army knife, and we're just going to have a basic platform with lots of little applets sitting on top. If this is the future of healthcare, we'll need a lot of hands helping to bring it to life. And while FinTech is still finding new ways to do creative things with financial data, I think healthcare has a world of opportunities and challenges when thinking about what to tackle first. What you're working on here at DevDays will one day enable all of us to have robust personal health records. It'll allow certain organizations to focus on figuring out best practices and then be able to plug those best practices into everybody else's decision support applications, enabling doctors in even the most rural areas to have access to the most cutting edge recommendations to better treat patients. What you're doing it'll help fulfill the vision and the promise of truly coordinated care. Easy and quick information exchange is necessary to treat patients across clinics and across borders. And providers don't want to log into 5 different screens to use 5 different products. To get to this future, they need apps to seamlessly appear as part of the provider workflow. This kind of information transfer is needed to create population health tools that are required more now than ever in this growing ACO and value-based reimbursement world, where providers are responsible for their patients no matter where they seek care. I could go on, but instead I'll close with this. What you are doing is very important because you're the ones who are going to build this future into existence. I hope in hearing about the history of the FinTech industry, you can draw a parallel to what's happening right now in your own industry. Before 2008, financial data was guarded behind closed doors. Crisis hit and the industry unbundled into many different best-of-breed products, powered largely by creative people being able to use an API that gave them unprecedented access to data. Sounds a little bit familiar, right? Thank you.
All right. Thanks, Stephanie, for this. Yeah, there are really a lot of parallels. And I do think that many of the things that you're saying that has happened in FinTech, we've tried so far. You know, some of us have tried to get their apps being certified for use in hospitals. But as you can see, if you have to deal with it hospital by hospital without there being any regulation, it's really hard. It's really hard to do. So basically, if I understand you correctly, we need the equivalent of PSD2 for healthcare. Now, once we get that, and this is the question I got here, is since you're ahead of us, is there anything new, maybe problematic coming up? Say it gets so easy for third-party apps to get to your financial data that they might say try to get you to invest in the wrong stuff or spend too much money. Is there like, do you already have some experience in what we're going to face next?
Yeah, it's a really good question, and the thing to keep in mind is that the US actually doesn't have anything like PSD2, and I would say that the 2 major markets for FinTech really, in the beginning at least, were the UK and the US. So Singapore, for instance, has been able to really jettison ahead as far as FinTech goes because they went just completely open regulation. Banks share data very freely. The UK went the regulatory route, where they instituted PSD2 in conjunction with GDPR to make sure that the data that they were now saying has to be able to be shared is in some ways tried to at least be kept safe. In the US, we don't have that regulation. And so this can all happen outside of that, where, Plaid came around, and because banks were starting to see all of their customers flocking away from them to using these third-party apps, however they were getting the data, they didn't want to be the bad guys, and they didn't want to be the ones whose customers couldn't go use these cool, shiny new apps. So they ended up choosing the lesser of two evils, either not letting their customers get what they wanted by being able to link their bank accounts, or just choosing one company, choosing one horse to ride, choosing Plaid, and deciding to build the API for that specification. And then Plaid could then connect to everybody else. And so regulation is good. And since healthcare is really ahead here, FHIR is kind of showing up everywhere in meaningful use and all these other regulations. So you are ahead. I think bad actors is always a concern. And so one thing that FinTech is just starting to do, and it's been a decade that they've been at this game already, but there are regulatory bodies within the US government that are now finally starting to think about something like accreditation for FinTech companies. So new core providers and new technologies that want to go into major banks or help old banks innovate. There's likely going to be in the very near future some kind of a central force that will be able to put a stamp on that company and say, we approve and we think that they're good actors and that we think that they're doing it the right way. But it's taken FinTech this long to even get that. And so with healthcare, we can build the rails, but you're right, to your point, until we can have someone out there who's looking at these different apps and saying, yes, we think they're doing the right things with data. Yes, we also think they're doing the right things by the end user and putting some stamp on it. There's likely going to be a little bit of the Wild West in healthcare in the early days.
Well, thanks for your answer. I'm really fascinated by the amount of parallels. And the good news, again, I'll repeat, is that at 2:45 this afternoon, there will be an open session in the lounge again, a Q&A meet and greet with you. So you'll be there to answer any follow-up questions. But thanks for this, Stephanie.
Absolutely. Thank you for having me.
Next slide. Well, I know what's on the next slide. All I wanted to do actually before saying goodbye to you is to say that next year, June, there will be DevDays US. There we are, right on time. June 7th to June 10th, 2021. Who knows what the world looks like then, but there'll be the 11th edition of the FHIR DevDays. And this will be in the US time zone. There's not really a US DevDays anymore. Let's call this DevDays June. It's certainly also going to be for South America and Canada, because that would be perfectly fitting your time zone. That's it for now. All that's left to do is have a small break and enjoy the rest of today's program. Bye-bye.